In this year's report, our view is that the market is moving into a more sustainable long-term growth cycle. Of course, we saw in big cities like Sydney and Melbourne last year significant growth. In fact, Sydney was up around 15%, and that number is not going to be sustainable in the long term. However, we see it as a slowdown in growth as opposed to a reduction in prices. We think prices are strong for the next few years, but we've predicted in Sydney around a 5 to 10% growth over the next 12 months compared to last year's 15%. So we think Australia's in good shape. Right around the country, we think the market is solid, and the outperformer in our view over the next 2 or 3 years will actually be southeast Queensland. When you look at the comparison of values to say Brisbane compared to Sydney or Melbourne or even to Canberra, we think Brisbane, the Gold Coast and the Sunshine Coast offers outstanding value. I think after the internet, Chinese buyers coming into Australia has probably been the most significant change in this country's market that I've seen in the last 3 decades. We've seen a whole new buying group coming, predominantly from mainland China and of course from other parts of Asia. But this has been a significant part of our growth story, and we think will continue to be a significant part of our growth story. It's of course attracted a lot of media of late. There are some locals that are feeling that first home buyers, for example, are being pushed out of the market by overseas buyers. We see it differently. We see it as being a very healthy trend for the future. The overseas Chinese buyers are buying in very specific areas which are popular precincts for the Chinese community. They're not pricing local buyers out of the market, but we think they're certainly bringing their overseas investment dollars into this country, which is a healthy thing overall for Australia. We think the Chinese story will continue in the long term. Of course, we've just had a surge of interest over the last year or two. Again, like the market overall growth, we may not see the same level of interest, but we don't see any reason why Chinese investors and Chinese buyers migrating to Australia won't see this as a great opportunity to invest in Australian real estate. 2 or 3 years ago, we saw first home buyers were dominant. There was low interest rate environment, there was rapidly rising rents, and there was assistance from the government to buy into the first home buyer market. So we did see that was very, very strong. That of course brought forward a lot of the buying for the current was done 2 or 3 years ago. So there have been less first home buyers right now in the market than there were, but we think they will come back. There seems to be an increase in inquiry from first home buyers going forward, and I think they'll be back in the market during the next 12 months. Of course, they will replace though by investors, both self-managed super funds or just private investors that, as we came out of the GFC, were looking for somewhere to put their money where they could get stronger yields, both in terms of rental yield and of course capital growth. And I think investors correctly saw the rise of the market, and many of the investors have already got into the market. Many are still to come into the market, and they will still enjoy, I think, 2 or 3 years of capital growth going forward. So over the next year or two, we may well see competition, quite strong competition between first home buyers and private investors in that sub $1 million market around the major capital cities of Australia. If we look at Sydney and Melbourne, that are the 2 biggest markets in Australia, the recovery started at the lower end, so that was sub $1 million, and it certainly has escalated up into the $1 to $2 million market over the last 12 months. What we haven't seen much of to date is buying in that luxury or prestige market, and that's generally say $3 million or above. We're starting to see that change though. As we speak, there's been an increase in the number of transactions. Prices haven't yet strongly reflected any growth, but that will be the next step, I think, that we'll see over the next 12 months. So we're seeing a lot of smart money going back into prestige real estate. Some of it's overseas money and some of it's local, but there's demand from both international and local national money getting into the prestige market. So we think that's going to continue, and we think that the luxury market is probably 10 to 12% undervalued at this point compared with the rest of the market. So I guess out there, if you were looking to buy luxury property, the timing or the window of opportunity to get into that market might be closing, because I think in 12 months' time it's going to be up maybe double digit from where we are today. Sydney is somewhat the New York of Australia, so there's been huge demand over the last 2 decades to locate close to, in and around the CBD. I think that will continue, but what has happened as a result of that is 2 things. One is prices around the CBD or the inner ring of Sydney within 10 kilometres of the CBD have become prohibitive for many people. So there's no doubt there's a large section of the community that may have wanted to live close to the city that are now looking for some more affordable options. Second thing, of course, is commuting has become very challenging, getting in and out of the city. That's being enhanced though as we speak by new infrastructure. The new state government is putting the foot down on some new transport infrastructure, predominantly roadways and rail links. What that's going to do is it's going to unlock some potential value in hubs in and around the CBD, usually 20 to 30 kilometres out of the CBD. People may have shied away from because of the commuting issue. However, they're going to become an easier commute in and out of the city. Of course, we've also got a lot of people via technology nowadays that are not having to get into the city as readily as they may have had to in the past. So we think that there are going to be some great value opportunities in specific hubs and areas 20 to 30 minutes out of the CBD of Sydney where there's going to be strong growth.